Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, October 7th, 2013. I'm Bill Duryea with Follow the Bots. Last week, S&P futures sold down below prior support at 1684, 1685 and traded down initially to 1666. Following the initial pullback, a short covering rally developed and the S&P traded back to what had been support. After trading back up at or near 1688, 1686, S&P futures sold back to retest the low during Thursday's session, trading down at or near previous support at 1662, 1660. On Friday, the S&P auctioned back up through the trading range, trading up to 1686 and ending Friday's session at 1684. During the Sunday Globex session, the S&P futures opened up gap below Friday's close and traded down to last week's low at 1666. The market auctioned back up to 1678 in an attempt to fill the gap at Friday's close. However, there was no buying interest above the 1678 price level, and S&P futures sold off into the close. As indicated in the point and figure chart, during the initial sell-off, the S&P paused and retraced up to 1678. However, the selling pressure continued, and on the subsequent pullback, the S&P sold down to 1666. At Monday's open, there was a modest pullback at or near the overnight low. However, the S&P spent little time at the low, and price auctioned back up above the minor resistance that developed during Sunday's sell-off and traded back to the Globex retracement price level at 1678. For a detailed review of today's market developments, we'll turn our analysis to the 5-tick range chart. Item number 1 shows the retracement back up to 1678 that occurred following the initial sell-off, as well as the overnight low down at 1666. As the micro data indicates, during the opening range pullback, the computerized selling programs ceased executing to the sell side. High-frequency initiated buying occurred, and the S&P traded up to 1674, paused modestly before trading back up at or near the Globex retracement level at 1678. The computerized buying diminished on the retracement back to the 1678 price level. There were two modest pullbacks, first down to 1674, followed by a retest of the high, and then a second pullback down to 1673, followed by a third retest of the high. During both pullbacks, the order flow events indicated that the computerized selling programs ceased executing to the sell side. However, when the market auctioned back to the high on the 3 separate occasions, there was lack of buying interest, followed by high-frequency selling. S&P futures spent the dominant portion of today's session, approximately 4 hours, trading in this narrow range between 1678 and 1675. In the last 30 minutes of Monday's session, selling pressure increased and the S&P sold off back down to the opening range low. Coming into Tuesday's session, the S&P is currently in a consolidation phase, attempting to build a base of support at or near the September 10th low at 1660. The market has yet to spend sufficient time at the low for new capital to enter the market and to acquire long positions. Stops are now likely resting 2 points below Thursday's low at or near 1661, 1660. Following a breakdown below a previous support level, historic data analysis indicates that the market must spend adequate time at the low to establish a new base of support. The pattern can be seen back at the end of August when the S&P initially traded down to the 1625 price level. The market spent several days building a base of support before it was able to break out above prior resistance. When the market gaps down below a previous close, as it did during today's session as well as Friday's session, and spends no time at the low, but rushes back through the trading range. While the rally appears to be genuine, it is indeed the result of previous shorts covering positions, attempting to get out of their purchases above the low. When the large financial interests have gotten out of their previous positions, the rally ends, auctioning back down typically to the starting point. Minor resistance exists at today's high, 1678, which is approximately the midpoint of the developing trading range. More significant resistance is located at what had been previous support at or near 1686, 1688. That concludes our market recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.